Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Treasury Prime. Christine, great to have you with us.
Thank you for letting me show up. I'm lovely to be here.
Okay, so before we get cracking, we're going to learn a little bit more about Treasury Prime. So, Chris, you're an embedded banking software platform. What does that mean in practice?
In practice, what it does is we're very US focused. We go into a bank in the US and we wrap all their depository systems and payment systems with an API. So that you can do anything the bank can do, but you can do it programmatically. So you can effectively program the bank however you would like to, and as long as it fits in the bank's governance model. So you can open a bank account, you can move money around, you can issue cards. Since we're in the US, you could issue a paper check. I don't know why you'd want to do that, but you certainly could.
Okay, and it was reported in February that you'd raised, I think, an additional $40 million, taking your total to round about $73 million, I read. That's a relatively modest total, given some of the sums that we've seen raised by fintechs, certainly, if not this year, then in previous years. Why so modest?
Well, if you look at the US banking system, which is what we're focused on, it is very fragmented. There are 10,000 US financial institutions. It's just a lot. And what we're trying to do is fundamentally change how that system works. That's the preamble. So the reason we're careful here is we're in a marathon, not a sprint. Our goal is to become a very large company which has a lot of influence over how banking is done in the US. However, it's a bank. I don't expect that's going to take 6 months. It's going to take, 6 years, 7 years, 10 years, some number like that. So that's why we're very careful about always maintaining a well-running business here and not trying to raise an enormous amount of money and then if we stumble, fall down and die.
Of course, the fundraising environment is much more challenging these days than it was certainly in most of 2022. But does the modest amount also perhaps point to the fact that you don't need that much more and that perhaps you're approaching profitability if you're not already?
Yeah, we have a very well-run business. We're very careful here. It turns out banks have a lot of money, and if you provide decent services to them, they are happy to pay you, and that is what we try to do. It was a tough fundraising environment because it would have been, in another era, it would have been an afternoon given our numbers and our progress and everything like that. But this took a little while, and we are also extremely picky about our investors. Since, like I said, it's a marathon. I expect to be married to these people for the next 5 years, and so I don't want anyone who I don't think is going to bring real value here. So we were very careful, and we were very lucky to get our investors we have.
I guess this time around you probably had to meet in person rather than doing it all over Zoom in an afternoon as well.
No, we did it almost all on Zoom, except for the end where we both wanted to meet in person. So we both flew to San Francisco.
Okay, so I guess some things have perhaps permanently changed, certainly on the fundraising side. I mean, you've talked about, you want to be married to these investors for the next 5 years, and you are a well-run business, you say, and obviously you're growing very fast. Can you give us some numbers about the pace of growth? Perhaps if you're able to give us a ballpark of revenues and perhaps when you will be profitable?
I can give you proxies, which, you'll get what you get. So the number to look at is number of banks that we have on our platform. Like I said, there are 10,000 banks. There are probably, several dozen active, what I call fintech banks in the US. And we have on our platform more than 16 different banks, and we add a new bank about every month, one a month, sometimes a little bit more. And that's where our progress goes. On the fintech side, because what Treasury Prime is, it's a connection between these two different worlds of banking and fintechs. We're a marketplace, a communication platform where these two parties can talk to each other. So we have 16 banks, we have more than 16 banks. And we have, each bank does like 10 deals a year, that kind of number.
So we've heard a bit about Treasury Prime. Let's now get to know Chris a little bit better. So, Chris, I see you were CTO of fintech banking or API banking at Silicon Valley Bank before you struck out on your own again. How did you feel when you heard that Silicon Valley Bank had collapsed?
Surprised. This is my world, so I'm plugged into it. And that week that happened, I heard something on Tuesday morning, and I discounted it. I heard something about Tuesday afternoon. I had somebody call me. I was like, this is ridiculous. Why are they not reading these numbers the way I'm reading them? And Wednesday, kind of midday, I think we decided that this was nothing unless there was a bank run and we should just ignore it. And then Wednesday night I said, well, I think there's going to be a bank run. and that was very surprising. I was at a dinner with, other CEOs and founders that night, just coincidentally. It was all we talked about all night. It's like, why is this happening? SVB is just a critical part of the startup world. And for that to disappear was quite a blow. Quite a blow.
And as I mentioned, this isn't your first rodeo in terms of being a founder. What's been the best and worst part of having that title of being a founder? And do give us some examples if you can.
It's fantastically satisfying when it works. It is amazingly satisfying. You're, the first couple people in the door, you have a blank slate, you start building things. And after working on it for years, you have something that's just incredibly impressive and wonderful, and that is just very satisfying. I can tell you the downside is when you're not doing well, it feels like someone's punching you in the face, right? It is very hard, and usually every startup has near-death moments. Most have multiple near-death moments, and it is emotionally taxing to do that. The little secret of startup world is also that when you're doing very well and growing so quickly like we are right now, it often can feel like someone's punching you in the face every day because you can't handle the growth, right? It's like the traffic's too busy. The reason startups exist is to take advantage of rapidly changing areas. So if you go into that world, it's satisfying to see it change, but it can be a lot to keep up with. I'm sorry, go right ahead. I was at a previous company. We were doing very well. We were completely dominating our market. And then our biggest customer called us up and said, we're getting acquired. And the acquiring company uses the not as good but competing vendor. And we're going to turn you off and we're going to break the contract. And that was a big deal, right? We were about to go, do a fundraise, and someone was looking at buying us, and for our revenue to take that hit was just incredibly terrifying. And I thought, was that going to make the company go under? And we successfully talked them out of it, and so we didn't lose any revenue, and everything was fine. And about 9 months later, they quietly said, well, we're going to turn you off now. But at that point, we didn't care as much as we had planned for it. It was the unexpectedness that was terrible.
Right, and just like Treasury Prime, if I can use this phrasing, you yourself seem to be embedded in banking too. What would be the most surprising thing that our viewers, that perhaps about you that our viewers wouldn't have expected of you? What, just kind of looking at you and your track record and your history, and what can you tell us to kind of that wow, I never would have imagined that was something you did.
I'm a technologist. I'm a startup guy. I'm here in Silicon Valley. This is where I've worked most of my professional career after academia. Everyone has a weird hobby here, and mine is beekeeping. I keep bees. I have a very large backyard, and I have my hives out there, and I keep the bees, and I do harvest the honey when it's time, and no one expects that. And I said, would you like some honey? And I hand them a jar of honey, and no one knows what to do about it. Doesn't seem to fit the whole technology world. It's as low tech as you can get.
Excellent. Well, I'm happy that you had some weird thing. I think you said your family's into stock car racing as well, but beekeeping seems a bit of a departure from that.
My family is into racing. They do they stock car racing and speed trials. How fast can they go? And The other side, the companion side of the family are surfers, and they're both excellent at it. And I can tell you, it's very frustrating for me because I am the clumsiest person in my entire family by significant margins. They're all like, I don't know about world class, but they're all high functional athletes, and I'm like, can't. I can drive straight. That's about all. I can surf a little, but I can't do the big wave stuff that they do.
Okay, so a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Treasury Prime co-founder and CEO, Chris Dean. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Chris, let's talk about the future of finance. So, Chris, we touched on the collapse of Silicon Valley Bank before. Are you worried about the banking system? Should we be worried?
No, I'm not worried at all. U.S. has a very robust banking system. It is challenging to have such a fragmented banking system, certainly. We have, like I said, 10,000 institutions. It's a lot. But the upside of that is that any one bank is, its failure, its closing is fine because it can be absorbed by the rest of the system. The day that SVB shut down, we had a very busy weekend. We moved lots of people around to different banks, but that's the trick in the U.S., that you can't put all your eggs in one basket. You have to have multiple bank accounts, you have to have multiple operating agreements with different banks, and that works. And if you do that, I'm not worried at all about U.S. banks.
I mean, some still think that perhaps to make these banks sturdier, and we've seen a little bit of this, that there could be now a wave of consolidation among the smaller US banks, certainly. Could this be bad news for the fintechs that they partner with? Because that would mean fewer customers, presumably.
Most of the fintechs are just at one bank, and when they have to move, generally that can be very challenging. There's regulatory stuff that's been happening over the past year or so that have made it harder for the smaller banks who are just doing fintech work. Our banks haven't had any trouble because we have a different model, but yeah, it could be a problem for some of the fintechs. I encourage everyone to have multiple banks if you're worried about this problem.
Sorry, Chris, I actually meant more so from a perspective of fintechs that partner with banks. If there are fewer banks for them to partner with, presumably yes, that would mean fewer contracts, fewer smaller revenues. Is that a worry?
No, because the number of fintechs total, like the end user things, will stay the same. Just they'll concentrate more at banks. And frankly, I'm not so worried about that. Why? There are 10,000 banks. Like a few of them, even 10%, if that disappear, which is not going to happen, there's still a lot. There's still 9,000 banks.
Fair enough. That's a good perspective. And of course, embedded finance and banking has been one of the buzzwords of fintech these past couple of years. Maybe you can just outline for us briefly what what has embedded banking done for us lately, and what should we expect from it going forward?
Sure. There's this common thing which has happened over the past 10, 15 years where the SaaS business has really taken off, where you have a software system which you can subscribe to, software as a service. And those have developed across various verticals, whether it's dentist office or construction companies or flower shops. There's bespoke custom software for these entities, and it is very good because it works exactly for that kind of business. What these companies have done is decided that they can add bank accounts to this problem to help their businesses run better. That's what embedded banking means to us mostly. We have lots of clients who do this, from the examples I gave. There's also landlords, that's another example. And it's easier to run your business when you have custom software to do it with the bank account attached. Having these be two separate things is not as convenient, and that's not something a bank can really compete against, because a bank isn't going to make software that allows you to run your construction company better.
And a kind of two-part question now, Chris. We touched on your fundraising before. Generally, fintech valuations have plunged from their peaks. I think your fundraising was actually an up round, so perhaps that doesn't apply to you. But have things bottomed out, do you think, in terms of fintech valuations?
No, bottomed out. Well, probably actually. That there was the heady days of free-flowing capital when all the venture folks had just the easiest time raising money ever, and so they could hand that to all the venture folks, all the folks like me, the venture-backed companies. That days are over, at least for a while. That there's actually good places now you can put your money besides a startup, and money is much, much tighter than it used to be. And I think people are being as careful as they were like maybe 12 years ago, which I think is appropriate for our business.
And the other part of that question is, there are of course plenty of players out there in terms of fintech players, both in your area of embedded banking and in other, whether it's neobanking or payments or what have you. There are some that are making money or were lucky enough or strong enough to warrant raising money and have a good war chest there. Should we expect a wave of consolidation among fintechs now, given that valuations are much less challenging than they were?
Oh yes. I mean, the days of 100 or 1,000x revenue for fintech companies, those are over. It's going to be back to where it should have been, which is more like 10x revenue, because you can expect a fintech to grow to that. But because many businesses were founded with these expectations that they're going to go 100x in a couple years, that's not happening, right? And that probably won't happen. So these businesses, they have to be acquired, right? They're either going to shut down or they're going to have to merge with someone else, because the business themselves is not viable. Treasury Prime's in a different position. We have a very solid business, but we get inbounds every day, I would say, from folks who are interested in selling their business. So I think there's going to be a rapid consolidation.
Okay, and one of the biggest bits of news in the financial space recently was Apple wading into the savings account space and offering much better rates than most traditional banks by several factors. Are banks and some fintechs about to really feel the heat from Apple and big tech, do you think? Is this now going to start happening more and more?
Oh, I think so. I think the Apple savings account's a great idea. You have to have an Apple card, so it's like, okay, that's good because they can make a lot of money off the card. And that's a great experience if you're in the Apple ecosystem. And that is like the embedded banking problem I cited earlier. It is very hard for a bank to compete against that experience, right? Where a bank, in this case it's Goldman who holds the funds there, they can partner with Apple and get distribution that they could never otherwise get. It's just an incredible win for everybody. Now, is that a high rate? Oh yeah, that's a high rate. I have that. I signed up on the first day. That's a great rate if you're going to keep some cash around. But I would expect that to continue. The bigger tech companies are continue to make their moves like they always have.
Okay, well, you have been warned, I guess, if you're a fintech founder. But Chris, look, it's time now for our round of rapid fire questions. Are you ready?
Yeah, I'm ready.
Okay, so I've got 90 seconds on my timer. Just one word answers is all I'm looking for, and when my alarm goes off, we will stop this round. So,
Okay.
Away we go. What fintech segment besides yours has the biggest potential over the next 5 years?
Oh, lending automation.
What is the biggest pain point in your everyday financial life that you would like to see resolved?
Paper checks. I hate them.
Do you think that we are at the beginning, middle, or end of the fintech wave?
Oh, beginning.
Do you have a metaverse strategy?
Oh no, nothing at all.
Have EU and US regulations kept pace with all the new possibilities and behaviors we're seeing in the financial industry?
No.
How would you describe non-fungible tokens, NFTs? A scam, B, an interesting concept, or C, a part of the future that we really want to be a part of?
Interesting concept.
Have you ever personally invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Yes.
On a scale of 1 to 10, where 10 is the most likely and 1 is the least likely, what would you give to the likelihood of the following happening? That one of the neobanks will be as profitable as a top-tier legacy bank.
2.
That central bank digital currencies will become a mainstream reality in the US or EU.
5.
That you'll be able to open a crypto account at a top-tier bank.
6. 7.
Oh, 6 or 7. Okay, well, on that note, we are out of time for our round of rapid-fire questions and for our conversation, sadly. So I really want to thank you, Treasury Prime co-founder and CEO Christine, for taking the time to speak with me today.
Thanks so much.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. See you next time. Bye-bye.